So in today's episode, we are going to take a look at one of my favorite earnings. And the reason this is one of my favorite earnings is because it helps me take a look at how the overall market is going to do in the upcoming months. And you might be like, Jose, how is that even possible? How can one earnings tell you all of this? Well, first, let's try to understand the company I'm going to talk about, and that is Micron Technologies. Micron Technologies right now is down about 7%. So we're also going to talk about if I'm willing to buy into the stock right now, and if I am or if I'm not, why. So this episode is going to be broken down to the following. First, we're going to take a look at what do they do and how do their earnings help me understand how the overall market, especially the technology market, is going to do in the upcoming earnings. Next, I want to take a look at their recent earnings and see the numbers of what the company has done and how they're improving or declining compared to the same time last year. Next, I want to take a look at their financial numbers. And finally, I want to give my overall thoughts on the business. Like always, all of this is just my opinions and should not be taken as advice because I am not a professional. So make sure to talk to a financial advisor before making any decisions. And if you ever want to get in contact with me, feel free to post on YouTube comments. You can find me on Twitter. You can find me live streaming on Twitch, or you can also find me on my Discord channel, which is free to anybody that wants to join. Finally, don't forget to check me out at josenaharo.com. Now let's get this episode started. And before we continue, don't forget to hit the subscribe button, the thumbs up, and let me know in the comments, are you guys bullish on Micron Technologies? Are you thinking this sell-off is an overreaction? Let me know in the comments below. And if you guys ever want to know when I purchase a stock, feel free to join my Discord channel, which is free to anybody that wants to join. And you should find a link to the Discord on the description or in the pinned comment if you guys want to join. All right, so Micron Technology, like I mentioned, is down 7%, sitting at $47 right now. Market cap is about $52 billion and currently has a PE ratio of 23.47. Let's take a look in the past month. In the past month, even with this drop, Micron has still given 2% to investors. And in year to date, it's actually down 10.2%. And in the past year, it has returned 11%. So we can see a lot of mixed signals going on with Micron. This one is a very volatile company, if I may say so. And I do believe it has to do a lot with the volatility of memory and the prices of memory. All right, so first, let me explain to you guys what Micron Technology does, and I'll explain why their earnings mean a lot to me and why this is actually my favorite earnings to take a look at. So Micron Technology pretty much sells two products. They sell DRAM and NAND. Both these two products are memory. I'm not going to go in any deep explanation of what those two products are, but these two products are used, these two memory sources are used in everything from your everyday life. So the RAM, the memory, and all this memory goes into the following. They go into the data centers. They go into the networking. So data centers, when we think about data centers, we think of the big dogs like Microsoft. We think of Amazon, Google, Tencent, Alibaba. And then they're in the mobile world, right? When we talk about mobiles, we're thinking about iPhones. Also any mobile products. And it doesn't just have to be the phones. It could be any tablets. They're also in the laptops as well, just anything electronically in the mobile world. They are also in the PC, graphics, and auto. When we take a look at PC, what would we think about? Intel, we're thinking about Dell, we're thinking about AMD. Because when we talk about graphics, we're thinking about NVIDIA. Again, we're talking about AMD. We're talking about all these chips in the auto industry. So why is it so important? Micron reports earnings yesterday, which was 9/29. Earnings seasons does not really begin till 2-3 weeks from now. 2 weeks from now, financial banks are going to start showing earnings. After that is when a little bit of tech companies start showing up. So we kind of get a little head start about 3 weeks ahead of time on how these companies are going to do, right? If, for example, we're gonna take a look at, but for example, let's say we're seeing an increase in data center. Data centers buying more memories. If that means Microsoft and all these data center places like Google are requesting more data servers. If they're requesting more data servers, it means the clouding companies that are using their servers need more bandwidth, need more space. So if that's happening, that means that they also have more customers. So it kind of trickles down. At the end result, if for example, Micron tells us that there is a slowdown, that slowdown it trickles down again, the same effect. So for example, if mobile phones are getting a high demand in memory, that means that the creators of these mobile phones are right now seeing an uptick on phones. And again, like I mentioned, this trickles down, and then one can really see I'm pretty sure anyone watching this video is invested into any of these stocks or at least one of these sectors. All right, so now that we understand what Micron Technology does, and when I explained why they are one of my favorite earnings to take a look at, let's take a look at those earnings. Why don't we? So in their most recent earnings, which was their quarter four for this year of 2020, so it was for it ended their fiscal year. They reported non-GAAP earnings per share of $1.08, which beat by 11 cents, and they represented GAAP earnings per share of 87 cents, which missed by 3 cents. Not a big miss. I don't think this is the major reason the stock is down. Revenue compared to same time last year is up 25%. So last quarter, and let me tell you guys this, last quarter, and it has just been a pretty crazy year for Micron, because earlier last year and even some portion of this year, Micron's memory prices kept declining and going lower, and no one knew where these things were going to bottom out. Thankfully, I think it was quarter 2 or quarter 3, Micron says they finally saw a bottom out on those prices, and then things continue to pick up. So that's why revenue is up so big compared to same time last quarter. Operating margins were 19.1% compared to the overall estimation, which was 20.5%. Guidance for quarter 1, they did give guidance, was about $5 billion to $5.4 billion. And this is a little bit, it's not falling short, but it's a little bit too far away from the overall consensus, which is about $5.33 billion. Normally you want to see that consensus right in the middle, but it's kind of closer to that upper edge of that guidance they're giving us. They're also giving non-GAAP earnings per share about 40 to 54 cents, when the overall consensus was about 68 cents for next quarter. So I do believe now this is one of the real reasons we're seeing this price decrease compared to same time, this stock price decrease. So Micron Technology says that the smartphone, auto, and consumers have started to recover and expect further demand improvements ahead. Obviously, we know right now due to COVID-19, and we've seen it with a lot of these companies, even with Apple, even though they did see a small increase in iPhones this most recent quarter, smartphones were pretty much declining, or not many people were out buying smartphones right now due to COVID-19. They were purchasing other stuff, but smartphone was one of the lowest increase improvements, and now Micron is saying that there is an improvement happening with the smartphones. It's happening with the auto. If you guys follow me, I'm very bullish in a company called Sorens, and they were seeing a bit of a decline in their revenue because the auto industry was hit hard. But now Sorens, which deals with artificial intelligence within cars and machine learning, the voice and audio visualizations for cars. Now this makes me even more bullish for that company, because we're seeing that turnaround happening. They're still seeing cloud and laptop demand still remain healthy, and is driven by the pandemic's work from home trend. One thing they don't say is that it is improving dramatically. They're saying it still remains healthy. So they're still saying a strong trend, but it's not constantly increasing how it was a quarter ago. If you're in the clouding companies, again, I don't say this is going to move the stock price much, but I do believe it's something to kind of keep in mind in the back of your mind to understand. Some of these clouding stocks have gone up dramatically, and we've seen it this past recent earnings, that the stock price went up so great that even though these companies reported amazing earnings, most of them, the stock price dropped down still, and that's just because that hype for them was a little bit too much. So now, unfortunately, one can't really tell how much that hype has affected the stock price right now. But right now, Micron is pretty much telling us that, hey, these cloud companies, to me, it's what they're saying. These cloud companies are going to report healthy numbers, but it's not going to be a crazy growth number like when everything originally started to move into this pandemic world. Micron says that the short-term outlook has weakened and enterprise demand is softer due to lower IT spending. And that to me was actually a pretty weird. I would have expected more companies to be doing more IT spending right now as they are trying to build up the overall progress of this working from home. But what could have happened is most of these companies could have made just big purchases earlier on in these past 2 quarters, and now they have too much inventory, so now they're gonna wait a bit, and then in a few quarters they're gonna start picking back up again. All right, so like I mentioned, this was for their full year of 2020. For the full year, Micron reported $21.4 billion of revenue, and this is down compared to 23.4 a year ago. The main reason for that price down, even though revenue is down, remember I mentioned prices were dropping dramatically for the memory side. Eventually things have bottomed out, and so it looks like the bleeding has stopped. But we're going to take a look at in a bit the historical past of Micron Technologies and how in the past 2-3 years that revenue is very much a cyclical cycle. Operating cash was about $8.3 billion versus $13.19 billion a year ago. So it's still very, very positive in operating cash flow. This is definitely a money-making machine right now, but it's still a lot lower compared to the same time last year. And here, let's take a look at the revenue. This is what I'm talking about Micron, right? Micron, look at this revenue. Revenue increases and decreases and then jumps up dramatically and then decreases. And I feel like we're going to continue to see that here. And people might wonder, why does this happen? Why is the semi such a cyclical industry? To my understanding is, for example, when new technology comes out, sometimes the companies that buy these memories are a little bit they're kind of overhyping this technology. So what ends up happening is they order a lot of memory for this new technology that they're building, and at some point it seems like they have probably purchased too much at the beginning, that then they start slowing down purchases or making less purchases, and it does reduce that revenue. But then obviously we're constantly innovating. So then what happens? Some new form of technological advancement takes place. That technological advancement needs more memory than before. So then again, continues to happen. Improvements continue to go up. And then again, they ordered a bit too much compared to what they needed at that time. So they continue to slow down until they clear off their inventory. Last quarter, like I mentioned, last year was 23.4. This year is going to be about 21.1. So it'll be somewhere around here. But eventually, again, we'll have new technological advancements. And this is just the overall trend, right? It could be wrong. We might not advance anymore technologically, right? I doubt that's going to happen. But it could happen, right? It's never a guaranteed thing. And then we're going to continue to see that. And eventually, we're going to hit a peak. And the same thing happens. So now let's take a look at what this does to Micron's margins. Their margins are actually very similar, right? It's very cyclical, but it is cyclical in an uptrend. And that is the same thing with the revenue. It is cyclical, but it is at least cyclical with an uptrend. That means that even though it keeps bottoming out, the bottom is higher than the last bottom. And that's what's happening with the overall profit margins as well, right? It tends to bottom out and then it picks back up, and the bottom is usually a lot higher than the previous bottom. So let's take a look at what analysts expect Micron to do. And we can see here in future growth, we're right here. Micron analysts are expecting a growth from here on. It doesn't seem like we're going to hit that peak that we hit in 2018. That's what analysts expect, right? Analysts could be 100% wrong. But right now, Micron for the upcoming years is seeing a growth of 14.5% annually for the next 3 years. This is pretty good, right? I consider anything around 15% to be a growth stock, anything about above 20% to be high growth. So 14.5, it's hitting to that okay growth. They're also expecting to grow their earnings dramatically in the upcoming years. Again, this is a money cash making machine. Is that the right a cash cow making machine? Whichever, you guys know what I mean. So now, before we take a look at my thoughts, I want to take a look at their balance sheet. And just to show you, even though things seem to be very cyclical for Micron, This means I want to make sure that they have plenty of cash and cash equivalents to be able to survive during those bad times. So right now, they have about $7.6 billion of cash and about $500 million of short-term investments. So pretty much they have about $8.1 billion of quick cash ready to go. They see a decrease in cash and cash equivalents. This here doesn't throw a red flag to me whatsoever. They still have huge amount of cash. Total assets at the end of the day for this quarter were $53.7 billion compared to a quarter ago, which were $52 billion. So an increase of about $1.6 billion. Now, the first thing I want to do is take a look at their total liabilities. Total liabilities increased by about $600 million. So that's a good thing, right? Even though total liabilities increased, total assets increase at a number much higher than total liabilities, almost 2 times as much. Actually, I think it's more than 2 times as much, about 2.2 times as much. So that's great news, because even though if debt is increasing, as long as that asset is increasing at higher levels. Next, let's take a look at current debt. This company has about $270 million of debt that it owes in the next 12 months. It has long-term debt of about $6.3 billion. So that's another good thing. This company actually has enough cash to pay off its total debt and total long-term debt plus total current debt and still have about, I want to say, another $1 billion of cash. So this tells me Micron Technology right now has a very, very strong balance sheet. All right, so now let's take a look at my thoughts. Micron Technology right now, I wouldn't consider this a true growth stock. And it's to me, it's actually very hard to value the price of Micron because it is very cyclical. So like I mentioned, right, we saw that cyclicality of Micron with revenue. So if we look at forward PE ratios, this year they're expecting to have a forward PE ratio about 15.59. For the end of next year, they expect to have forward PE ratio of 7.47. And you might be like, Jose, that's super cheap. We should buy this right now. It is super cheap when we compare it to other stocks, but let's compare it to Micron's technology. And next, hold on, and before we do that, let's take a look at forward price to sales ratio. Forward price to sales ratio right now is about 2.29. Again, very cheap for a company that is making very good money right now. For the upcoming years, 1.83. So we might again be like, Jose, these values are pretty low. Let's go buy right now. So let's take a look at historically the price to sales and the price to earnings ratio for Micron Technology. PE ratio has been somewhere between 7.87, 4.3, 6.84, 6.1, 11.4, 11.6 within the past 7-8 years. So we can see it ranges anywhere from low 4s to high 11s. And the reason for that is because this company is very cyclical. So based on that forward PE ratio, 7.47 doesn't actually seem overvalued. It doesn't seem undervalued at all, right? It is within that range that it normally runs about. So that's a good thing. Next, if we take a look at their forward price to sales ratio, their forward price to sales ratio in the past years has peaked at right now at 2.1, and it has gone as low as about 0.7. So again, it's right now, its forward price to sales ratio are 2.29 and 1.83. It's very close to those values. It's within that range that it's normally at. So to me, again, Micron Technology at the moment is not undervalued in my opinion, but it's not overvalued either. To me, I personally had a position in Micron Technologies. I ended up selling just because I started not really liking them for that cyclicality, and I just wanted to put my money elsewhere. Again, it wasn't for any bearish reasons at all, and I still don't really consider any bearish reasons. If I was forced to buy, let's say, if I was forced to buy Micron Technologies, I wouldn't mind owning it, but I would rather have that money elsewhere right now. So those are my thoughts on Micron Technology. Let me know what you guys think. Like always, make sure to hit the thumbs up, make sure to post in the comments. Take care, guys. See you next time and catch you later.